Worrying global cues with US's fresh visa salvo is offset by optimism over a demand boost following GST cuts, keeping the market in a bind. IT and healthcare are the big drags, while utilities and realty notch gains. Trump's imposition of an additional $100,000 fee on new US H-1B visa applications dents sentiment for IT stocks. Several Indian players provide updates indicating limited or no impact, but concerns on margin impact and growth linger. Prime Minister Modi tags the GST cuts as Bachat Utsav. Industry leaders too see growth getting a fillip across sectors like automobiles, consumer durables, agriculture, MSMEs, and of course, credit. India and US step up engagement on ties with Commerce Minister Piyush Goyal in America for trade talks, and External Affairs Minister S. Jaishankar set to meet US Secretary of State Marco Rubio later today. DIPAM Secretary Arunish Chawla expects to beat the divestment target for FY26. He adds that all major PSUs are part of the divestment framework, and 1 to 2 strategic divestments and listing of some PSU subsidiaries are on the cards. Well, hello and welcome to Business Lunch live from the CNBC-TV18 Motilal Oswal studio. I'm Vamakshi Doria, and we're seeing a bit of recovery as far as the markets are concerned. The Nifty, was at the day's lowest point, was at 25,212. We've seen the Nifty now linger around that same mark, so near 100-point recovery is what the Nifty has posted. Apart from that, when we look at the broader end of the market, that has not been doing well because the advanced decline ratio is largely in favor of the declines. The mid-cap index, of course, has now moved into the green. If you can see, around 11 a.m., the advanced decline ratio lines crisscrossed. So far, it's almost 1:1, but the declines outnumbering the advances. The small cap index will also come up for you on the screen, and that is where the pain is. The mid cap end of the market, though, is doing quite well. The small cap index, as you can see, is down almost 79 points. Since the morning, that index has not seen any recovery so far. Now, in terms of sectors, what's actually pushing the Nifty lower is of course, the IT pack. Of course, we've seen some bit of recovery creep in there as well. Take a look at some stocks like LTI Mindtree, Persistent Systems. We've seen a near 2% recovery from the day's lowest point in these counters. But today is all about September 22. The new GST era has come into effect from today. Majority of goods and services will now be taxed at 5% and 18%. Meanwhile, ultra-luxury items will be taxed at 40%. Now, in a special address, Prime Minister Narendra Modi called the new reforms a festival of savings. He also said that it will accelerate India's growth story. Listen in.
ये रिफॉर्म भारत की ग्रोथ स्टोरी को एक्सेलरेट करेंगे, कारोबार को और आसान बनाएंगे, निवेश को और आकर्षक बनाएंगे और हर राज्य को विकास की दौड़ में बराबरी का साथी बनाएंगे.
Well, Union Home Minister Amit Shah, in an exclusive conversation with Network 18 Group Editor-in-Chief Rahul Joshi, said the GST 2.0 reforms will be remembered as one of the greatest in the history of the country. Here is what he had to say.
मैं मानता हूं ये बहुत बड़ा कदम है और इससे जनता का भरोसा बढ़ा है कि अगर हम टैक्स भरकर सरकार की नेट को बड़ा करते हैं तो सरकार टैक्स की कटौती कर फायदा जनता को ही पहुंचाएगी. और ये भरोसा आज़ादी से अब तक अदृश्य था. पहली बार वो दिखाई पड़ता है कि कोई भी सरकार अपने बढ़े हुए टैक्स को ये कहकर प्रोत्साहित करेगी कि भाई आप टैक्स भर रहे हो तो अब हम टैक्स कम करेंगे, तो ज़्यादा से ज़्यादा लोग टैक्स की नेट में भी आएंगे. मुझे विश्वास है इनकम भी कम नहीं होगी,
इन्वेस्टमेंट
बढ़ेगा, बाजार में एक प्रकार से तेजी भी आएगी और लोगों को सस्ता भी मिलेगा और यहाँ उत्पादन की गतिविधियां भी बढ़ेगी और देश की निकास भी बढ़ेगी.
Well, new GST rates have now kicked in and several auto companies expect bumper footfalls. Our colleague Abhimanyu joins us from Mahindra showroom in New Delhi with more details. Abhimanyu?
Navratri has begun and so has the festive season. The GST cut, which was implemented by the GST Council, has finally come into effect, and prices of all automobiles across India, across segments, have come down. In some cases, they have even been reduced by auto dealers and auto companies much beyond the relief which has been given to customers as far as the tax reduction is concerned. So there has been a significant cost reduction, price reduction as far as several vehicles across segments are concerned. And our companies, auto dealers, they are looking to cash in the sentiment within the aspirational middle class, within those people who currently either own two-wheelers or do not own any vehicle, who are trying to buy a small car. So that's the most price-sensitive segment which they are targeting. Obviously, as far as SUVs are concerned, they are also a part of the list, since there has been a significant cost reduction as far as price of SUVs is concerned. We are currently standing at a Mahindra showroom in New Delhi, where there has been a significant cost reduction which has been witnessed. Speaking about Mahindra Thar, the cost reduction has been around rupees 1.2 lakhs. For Mahindra XUV, the cost reduction has been between rupees 1.30 lakhs to rupees 1.70 lakhs. And for Mahindra Scorpio, it has been around rupees 1.70 lakhs. Now, auto dealerships, auto companies are expecting people to come out in huge numbers in the next few days, in the next few weeks, and have already kept an inventory of around 90 days as far as cashing in the festive season, the festive fervor is concerned. They're expecting bumper sales to the tune of double-digit rise in overall sales in the next few days and weeks. They are trying to cash in onto several festivals like Navratri, Dashera, Diwali, Chhath Puja, and subsequently the festive season is expected to stretch right till the new year. So the festive fervor is expected to hit the markets, and not just in terms of footfalls, but also in terms of large purchases.
Absolutely, Abhimanyu. We'll be watching out for that. But take a short break then. We'll get you more news and updates on the other side, so don't go anywhere. Welcome back. You're watching Business Lunch on CNBC-TV18. Let us now focus on the other big story of the day. The United States has raised the annual H-1B visa fees to 1 lakh USD per applicant. Reema is here to tell us more. Reema?
Thanks so much for that. So IT stocks have been a bit edgy on the back of this $100,000 H-1B visa fee hike. Let's get to the stock-specific impact. So a lot of companies, mid-cap companies, have intimated the exchanges about the potential impact. So outlining that, First Source, no impact. They've not sponsored any H-1B visa. Coforge says only 25 new H-1B visa petitions last year. Of that, 63 were approved. Cyient says only 6. Emphasis says 130 new H-1B filings in 2025. Hexaware says we've been trying to bring down our dependence on H-1B visa. Last year, there were no H-1B visa applications filed by the company. Persistent hasn't put out a number, but they're saying we do not expect any significant impact on the operations of financials. But in a nutshell, what the numbers tell us is that companies have been reducing their dependence. Only a fraction of the overall employee base is sent to the US on the back of H-1B visa, and therefore they believe the impact is not going to be manageable. From the large cap space, we haven't heard, but Bank of America, in its analysis, says Tech Mahindra will be most exposed. CLSA says LTI Mindtree Persistent could see the highest impact, while TCS could be the lowest at 1%. But on the whole, the EPS impact is seen in low single digits. So CLSA says not more than 6%, and that is assuming it's status quo, it's ceteris paribus. Everything continues as such, and the companies bear the entire burden. But that's not that's not a likelihood. In reality, the companies could look at sending fewer people on H-1B visa, increasing the local talent hiring, increasing offshoring, increasing onshoring. So therefore, the actual impact could be a lot more limited.
All right. Thank you so much for bringing us all of those details, Reema. You've had a busy weekend. But meanwhile, a Financial Times report says that the United Kingdom is exploring proposals to abolish some visa fees for top global talents. British Prime Minister Keir Starmer's Global Talent Task Force is reportedly working on ideas to attract the world's best scientists, academics and digital experts to the country. Now, the report also says that the visa cost will be reduced to zero for those who have attended the world's top 5 universities or have won prestigious prizes. On that note, let's slip into a very short break then. We'll get you more news and updates on the other side, so stay tuned. Thanks for staying tuned into Business Lunch. Now, in conversation with CNBC-TV18, Prime Minister's Economic Advisory Council Chairman Mahendra Dev outlines a 4-part plan to help Indian industry manage the impact of US tariffs. Sapna is here with all of those details. Sapna?
Well, we did have the good fortune to catch up with the chairman to the Economic Advisory Council to the Prime Minister, Professor S. Mahendra Dev. And of course, starting off first with the US tariffs, there is a fourfold strategy that India is following. We'll probably see the results in the coming weeks. That's one aspect. Second, of course, dwelling on the domestic economy, here the ESE-PM is extremely clear that 6.5% growth rate is achievable for the current financial year. India's growth rate is not going to be lower than that. H2 is going to be much better in terms of growth numbers. Third, of course, the Prime Minister is indeed focusing on the next generation reforms, mainly on deregulation and ease of doing business. There are two important government panels which are already underway. We'll have to wait and watch and see what comes out in terms of the final recommendations. Third, of course, in terms of the MPC, what can we expect in terms of interest rates going forward? Here, the ACPM probably feels that the full transmission of the earlier rate cuts have not really happened. So we'll have to wait and watch and see whether there's another rate cut at all by the MPC or not. Of course, that's a call to be taken by the MPC, of course. Last but not the least, also in terms of the discussion paper that has been put out by the Reserve Bank of India in terms of revisiting the inflation band, or rather the flexible inflation targeting framework. Well, here the ESE-PM is extremely clear. They think that the 4% mark should not be tinkered with at all. There should be a status quo as far as that framework is concerned.
All right. Thank you, Sapna, for getting us all of those details. That's all we have in Business Lunch. But before we let you go, take a look at Dr. Reddy's as well as Nestle. Both of these counters have seen a fair bit of profit taking for now. You know, they're off almost 1% from the day's highest point. The Nifty has managed to slip further. Some recovery has been sold into. But that's all we have on this edition of Business Lunch. Don't go anywhere. Medcap Radar up next.